What happens if a water heater breaks in one unit and it floods out a bunch of other units?
That is a very common question that we get about someone who didn't maintain their water heater, dishwasher, washing machine, whatever it might be. It breaks and then floods out that unit, the unit next to it, possibly units below, causing a lot of water damage. And they always feel that it's the unit owner's fault because they didn't maintain it. It was old, out of service. But the bottom line is most insurance policies for community associations cover resultant water damage. So if it was a sudden and accidental break of a pipe or a hot water machine or a dishwasher, and it floods out those units, an insurance company's policy for the master is going to respond. And a lot of those instances, the property manager and board isn't too happy about it responding, but that's why we purchase these policies.
What happens if the water damage is something that comes through the roof?
Water coming from the outside of the building is always a little bit tricky. If it's just wind and an old roof and you have a slow leak and there's water that's been coming in over time, insurance companies usually going to decline that claim. Now you mentioned ice damming. Ice damming is something that's covered in the insurance policy.
A long time leak would not be covered by insurance?
Correct. Insurance policies all list a claim as sudden and accidental. So again, when we talked about the water heater a few moments ago, the pipe suddenly broke, even though the water heater was old. If that water heater was just dripping day after day for a year, causing mold and water to build up and damage, the insurance company views that not as a claim because it was not sudden and accidental, but as a maintenance issue.
And this involves mold also.
Well, mold in general is something that occurs over time. Insurance companies will decline mold for property damage in most cases.
There's a leak from out, and it's a long time leak that people were not aware of. No insurance company would be involved in a reimbursement for that?
Correct. Obviously, it always depends on each claim. But if the insurance company comes in and can determine that it's been leaking over a long period of time, it's not sudden and accidental, and they can decline coverage.
To me, that means it would be critical for associations to keep up their maintenance.
And that's why I start off, we have a lot of conversations of where's the line between maintenance and insurance.
There's been some form of damage. How should the association respond?
You have a little bit of time to report a claim. So if you feel that there may not be a claim, maybe we'll talk about deductibles maybe in a moment. It could be under the deductible. You don't know. Take a day or two. Have a contractor come out. Look at the damage. Tell them, please, take a lot of photos. Don't take anything. Don't start ripping things out. Don't start performing work so the insurance company adjuster can see it. But get an estimate. See what the damage really is and what they think the cause is. There's nothing wrong with doing the research first before you put that claim and mark on your insurance.
What's the relationship between unit owners' deductibles and the association's deductibles?
Okay, so now in the instance where there's two units infected starts with 3 claims. The master policy covers the structure. So the main parts of the building that usually on an original specifications basis, so we're going to replace what was originally there, the floors, walls, ceilings. The unit owner's policies is going to cover their improvements to the units, and then their personal contents. The master policy is going to have a deductible. It's certainly going to be a lot higher than a unit owner's policy's deductible. Unit owner is probably going to carry maybe a $250 or $500 deductible. Master policy deductibles are usually around $2,500 at the lowest, but usually $5,000. The master policy is responsible in the governing documents for repairing the building from damage. So one, the master insurance policy, when they decide that, yes, this was a sudden and accidental claim, and we're going to pay, let's just use $100,000 in this instance, to repair the building, that check is issued to the condominium association. And the condominium association is supposed to hire the contractor and use those funds to repair the building. They shouldn't just sign that check over to the unit owner or expect someone else to get that work done. Vice versa, the unit owner's policy, that's their policy. They're going to get their check less their deductible payable to them to hire their contractor to do those upgrades. They need their cherry cabinets replaced. They had granite countertops. They had whatever these upgrades were. They're going to be able to choose their contractor to do their upgrades. A lot of times it gets easy if it ends up being the same contractor and all can agree on one contractor doing the work, but it does not have to be.
Is the manager and board hands off at this point?
Well, the insurance company is only the financial end, so the manager and board really needs not to stay uninvolved in the claim. Because I have had instances where, okay, usually on a smaller claim, not a $100,000 claim, but there's, $7,000 worth of damage, and an association just sends that check over to the unit owner, who did give them an estimate saying, hey, this contractor's going to charge me $7,000 to fix it, but then they use that money to pay their car bill, their mortgage, and other payments that were more important to them, and just live with that damage in their unit. And that's not financially well for the entire association.
Do insurance companies ever make good on a claim and then attempt to get reimbursed from someone, an outside party that they feel was at fault for the issue?
So what you're talking about is called subrogation. An insurance company, the master policy is paying an insurance claim for XYZ Homeowners Association. That is their customer. They're going to pay out $100,000 of water damage for a broken pipe. Now, they may find out that pipe was a manufacturer's defect. They can then subrogate against the manufacturer of the pipe to try to collect that claim. That's a very simple case, works, and the insurance companies usually collect on it. It will take a year or so for them to win that collection, and if they do win that collection, the association will get part or all of their deductible back. In another instance on that, though, there's subrogation against unit owners. In New York State and in most bylaws, the insurance company is not allowed to subrogate back against a unit owner. So even though that unit owner didn't maintain their water heater and the hose broke and flooded out the units in their fault, they're an owner in that condominium association, so they cannot subrogate against them. If it is a tenant who is a renter in that unit and the tenant has an insurance policy, the insurance companies can subrogate against the tenant. So we had an incident where a tenant was smoking and they put their cigarette butt out in a potted plant that had old Miracle Grow in it, and the Miracle Grow combusted and caused a fire, damaging 3 units in that association. The insurance company paid the claim directly and then subrogated against the tenant's insurance policy, and they were able to receive some of the money back.
Can you explain the difference between original and all-in?
Many of the associations, as I've said, are based on an original specifications, meaning we're going to replace what was originally there with the unit, not any of the upgrades, such as a finished basement, granite countertops, hardwood floors. If they weren't originally there, the master insurance policy is not going to replace them. That becomes the responsibility of the unit owner. There are insurance policies that are called all-in. If your governing documents or your type of association says we can have an all-in policy, that insurance policy covers everything original to your unit plus all the upgrades on the master policy. The unit owner is no longer responsible for insuring those upgrades.
What would entice an association to pay extra for all-in?
No good answer to that one. Most don't even like it. But it's becoming more and more common, and I don't know if I'm going into this. The state of Connecticut, they made it all insurance, all condominiums, all in.